It's about that time of day again. My name is Joseph. Thursday evening, June 14th. Welcome back to your nightly newsletter. My job is to help new traders earn consistent profits using a simple and reliable trading strategy. And my plan this evening is to identify the most reliable trading opportunities, setting up for tomorrow's trading session. And tonight, I'm covering crude oil, S&P, Nasdaq, gold, and euro. Starting off this evening, crude oil is bullish with a spike in range pattern, so I'm looking for buying opportunities down at the lows of that range, while keeping an eye on the 2-try rule up above the highs for selling opportunities back down to those range lows tomorrow morning. The S&P is range bound and stuck in the middle of a range this evening, so my plan is to stay patient and fade the breakouts, buying low, selling high, and using those 2-try rule failures tomorrow morning. The Nasdaq is bullish with a spike in channel pattern, telling me to look for buying opportunities using seller failures below the low of the channel tomorrow morning. Gold is bearish and trying to rotate back into the weekly trading range this evening, and I have my eyes on a falling resistance trend line overhead for selling opportunities tomorrow morning. The euro is bearish with a spike in channel pattern, so I'm looking for selling opportunities up above prior swing highs with a target using that pendulum swing tomorrow morning. Well, we're ready to wrap up what's been an incredible week with quadruple witching tomorrow morning, which means our window of opportunity will be a little bit smaller, but that's not going to stop us from finding the best opportunities for Friday's session. Before I jump in to put the plan together for Friday's quad witching session, I want to remind you, if you're watching me on YouTube tonight, you can find a detailed description of this entire trading strategy written out right here on my blog at sidewaysmarkets.com. I'll leave the link in the description of the YouTube video. Also, if you have any questions about anything covered tonight in this video, please remember to post those questions in the comment section below. And if you like what you see, please help support this channel by subscribing and hit the bell icon so you get notified every time I post another video. And if you really want to stay in tune with everything going on here at School of Trade, head over here to the blog at sidewaysmarkets.com and make sure you join our mailing list. I'll put all the links in the description of the YouTube video. Follow that link over here to the blog, and while you're here watching the video tonight, grab that mailing list, right? Join our mailing list, give me your name and your email address, and I'll shoot you an email every time I publish something new. Also, don't forget, if you're on social, StockTwits, Twitter, Facebook, LinkedIn, whatever your favorite flavor of choice, if you're hanging out on social media, you're going to love following me. I'm always posting videos, charts, links, quotes, all kinds of great content that you won't find anywhere else on the interwebs. Grab it right there, lower left-hand corner, and follow me on social. How about some charts here tonight? That's right, all the charts from tonight's video, you can have them on your computer for tomorrow. Follow that link below the video on our blog. And speaking of tomorrow, how about a free pass? If you're not a member here at School of Trade and you'd like to learn my strategy, I've got a deep dive for you. Grab that free pass in the upper right-hand corner. Come join me as a guest in the trade room, right, and see what everything's all about. All right, guys, don't forget, any questions, post those questions in the comment section below. And don't forget, tomorrow morning, right, is Quad Witching Friday. That's right, the third Friday of every 3 months. And that, of course, is March, June, September, and December, right? We, of course, are in the third Friday of June, right? The first Friday was the first of the month, the 8th, and of course tomorrow being the 15th. So Friday, June 15th is the third Friday of every 3 months. In fact, you could say we are smack in the middle of 2018, right? We are 6 months in and 15 days into that 6 month, right? We are smack in the middle of this year 2018. It's been a great year so far, right? Been a great year so far, but we got to worry about tomorrow, right? That's the most important thing for today, for tonight's newsletter. So tomorrow's session, what do we have to worry about tomorrow? What's on my mind? Well, first of all, it's been a pretty active week, right? We had the Bromance Summit, the old Singapore Summit, on Tuesday. We had the FOMC on Wednesday, right? We had the ECB. We also heard today from OPEC, right? They're back and forth with Russia. They're trying to figure out if Russia is going to stay with this production cut, right? It looks like they're going to be increasing production from OPEC, right? Don't ask me why the price on oil is rising because of it. I'll leave that to the experts. But it's been a busy week, right? Summit on Tuesday, Wednesday, FOMC, right? Thursday, ECB. Boy, that euro got whipping around today, didn't it? Draghi laid into that euro today. So it's been a busy week. I would imagine a lot of traders have been whipped around all week, beat up and thrown around by these big news events. I didn't think it was that bad personally, right? As long as you knew as long as you aligned your expectations, right? I mean, it wasn't really out of the ordinary here if you knew what we were dealing with. Well, I'm sure a lot of folks out there probably don't have my newsletter in front of them every evening, right? And of course, they got tossed around like a rag doll this week. We may see a little bit of exhaustion tomorrow. And in combination with the fact that tomorrow is quadruple witching, right? Quad witching has kind of a self-fulfilling prophecy to it. You know, people know there are 4 different asset classes expiring. People tend to trade lightly because of that. That brings the volume down, and because the volume is lower, people trade lightly, right? So it has that self-fulfilling prophecy to it. So if I had to guess tomorrow, I would say we're probably going to get, maybe 90 to 120 minutes of good price action tomorrow morning. And I would imagine that will probably be between, right, we've got that news at 9:15. So I would say probably between 9 and 11 o'clock tomorrow is probably when you're going to get the most reliable price action. Now, of course, I'm here in the U.S., so I'm biased to the U.S. morning session. If you're in London, though, if you're in Europe or you're in Asia and you have the benefit, right, of trading the overnight session, you'll probably see a full session, right, in the overnight session, right, in the London session. But as far as the U.S. session goes tomorrow, I would imagine, 9 o'clock to 11 o'clock is going to be your sweet spot. It may even be less. It may even be 9 o'clock to 10:30. Right, or 9:30 to 11, that smaller window of opportunity. So I do expect there to be a little bit lower volume tomorrow. We got rollover, it looks like, on the euro most likely tomorrow. I would expect there to be a little bit of a, kind of a waiting game because of quad witching, right? The kind of self-fulfilling nature to quad witching. And, let's not forget, too, it's also a summertime Friday. Right, for most of the country, right, it is really cold and dark for the majority of the year, and so they get a couple weeks, right, between June and September, right, to have some fun on a long weekend with the kids. So, hey, we'll throw that in there as well. So we're definitely expecting tomorrow to be a smaller window, a definite self-fulfilling prophecy to it because of quad witching. And really the only major news we have tomorrow is this industrial production number, right, which is going to be a highly anticipated number. Remember, with this whole trade war going on, the goal was to bring manufacturing, right, industrial jobs back to the United States. Whatever your opinion of that is, doesn't matter, right? But that's been the whole strategy, right? So the strategy has been to bring those jobs back, right, to the United States. And of course, I'm assuming tomorrow, right, there'll be a big number tomorrow morning at 9:15, and we're going to see, right, if it's working, right? So we can definitely expect that to be a market-moving event, right? But I'll tell you though, 9 o'clock to 11 o'clock tomorrow, most likely going to be your sweet spot, right, for the most reliable trades tomorrow morning. So watch the time closely tomorrow. Again, if you're in Asia or London, you have a much bigger window tomorrow. But if you're in the U.S. like I am, right, it's going to be a relatively small window tomorrow. So we want to make sure, right, we make it count. All right, let's jump into our charts here tonight. I've got crude oil first, S&P, Nasdaq, gold, and of course a wrap up on the euro. The euro got clobbered today in the wake of the ECB announcement. We'll grab a look at that in a moment. Crude is bullish with a spike in range pattern, and that tells me to look for buying opportunities near the lows of the range. And if I see the buyers struggling at these highs, I can look for the 2-try rule and selling opportunities after the momentum shifts back below that moving average tomorrow morning. So as you can see in the chart here tonight, I've got as you can see, a little bit exotic right here in the chart tonight, as you can see here. First of all, we go up, right, into a range. The range was confirmed this morning. This morning was a range day on oil, right? The range was confirmed this morning, went up, came slamming back down, and now it's trying to make a run back higher here. So I'm adjusting this now to call this a spike and range pattern. And of course, whenever we have a spike and range pattern, right, we're looking for buying opportunities down right below that range. Here's kind of what you want to be thinking about when it comes to a spike and range pattern. We spike up, right, into a trading range. And ultimately, there's a bull bias to it, right? We're biased to the upside because of the spike going higher. So what I'm ultimately looking for is I'm looking for buying opportunities using the 2-try rule and failure patterns down below. So below it, 1 try, 2 try, and buying it back up. Then, right, we look for that, what we call the fake out, breakout, pullback pattern, right, to go higher from there. Well, once we get outside of that range, buyers are going to start drying up here, right? We're going to be too high to keep buying unless there's something substantial, a news event, a political disaster, a natural disaster, active terrorism, whatever, right? Assuming there's nothing else that's kind of crept into this marketplace, right? This market will eventually want to gravitate back towards that range. The problem is that the momentum is moving higher. So I can't use the same type of 1 try, 2 try failure pattern, right? I can't use that same type of aggressive seller failure as a buyer failure to sell back down in, because what likely will happen is there will likely be buyers waiting there, right, to buy it going higher, right? So I don't want to mess with that. I don't want to sell when the momentum is moving higher. So what I'd rather do is I'd rather wait now, get the moving average up there, let those buyers try once, try twice, and then I'll wait for the failure. Now, normally, right, if this was just your regular range, I'd be selling that failure back down into that range, right? Just like we have 1 try, 2 try, buy it back in, right? 1 try, 2 try, selling it back down isn't going to be the best trade here because, again, momentum is going, right, to the upside. So what I'm going to do is, anticipating this going back into that range, I want to wait for the pendulum, right, to begin to swing back in the opposite direction. So I wait now for that strong move down, and then I can usually try to use that same level up there, right, for my sell now going back down in, right? Does that make sense, right? So instead of selling it aggressively at the 2 try failure, I've got to wait for the turn and then sell it, right, once we see some more proof, right? Because again, I want to see that momentum turn for me so I can get it back down into that trading range. Okay, so here we are now. Right, here we are now, beautiful example, right? We get a trading range here, and of course this was updated early this morning. We go up, right? 1 try, 2 try, back down, 1 try, 2 try, back up. Now, out of these, right, for today, it was a range day, so you're perfectly capable, right, intraday here, trading both sides of this market. Now, though, seeing, though, that we didn't have the full pendulum swing, the market, you can definitely feel it's got a bit of a bullish tone to it, right? Don't ask me why. Right? We heard reports today from OPEC that said basically they were going to be increasing production, which does not correlate to rising oil prices, right? More of stuff doesn't usually mean the prices go up. So the odds of it coming back are pretty good, right? Once the crowd realizes that they're worried about nothing right now. The problem is anytime somebody hears the word OPEC, they just buy. Everyone assumes it's bad for the price of oil, right? But a lot of times, right, it's not bad. It's just the reaction to the word OPEC, right, results in a bullish response to it, right? It kind of has this tendency to do that. So the bottom line is, right, we see that 1 try, 2 try, back up, right? Now as we go higher, right, 1 try, 2 try, I don't have the confidence, right, to sell going right back into it. What I do want to do is wait for that failure, right, down, and then try to sell it once I can get my hands on that, right, on that moving average, right? So that's the basic idea for tomorrow, right? So up, 1 try, 2 try, failure, and then round it over, right, and sell it as it's coming back down in, right? As we go back to the lows, 1 try, 2 try, back up in, right? Just like we saw back here, 1 try, 2 try, back up in, 1 try, 2 try, back up in, right? And of course, we're staying away from the middle. We don't want to get involved, right, with that middle. So up, 1 try, 2 try, failure. Don't take the failure, but take the pullback after that failure, or 1 try, 2 try, right, and then back up in. If we end up sitting inside this range tomorrow, again, quad witching, be careful, right, because it's a very, very narrow, right, narrow range. Now, how do we break out of this? How do we break out of this range? What would a successful breakout look like? Right? What would I need tomorrow to say, you know what? I'm no longer trying to go back into the range. What would I need? 2 tries, right? 1 try, 2 try. And this second try needs to show us some strength, right? You can see what happened earlier. Went up, nice strong move up. It couldn't hold the pullback and run. So what do, right? It drops back in. We need to see that second leg jump. If they can give us a strength, pullback strength, then by all means, I'll gladly connect these highs, bring it up off that low, find a new channel, right? And we'll buy the low of that channel, right? Because the momentum at that point will be so far, right, in the corner of the bulls that any pullback at that point will likely be a buying opportunity, right? But until we see that, we expect the market to want to go back into that range. Momentum is pointing higher right now, so it's going to be 2 try rule at the lows, back in, 1 try, 2 try, failure, skip it, and then pull back, right, as we go. All right, and remember, if we just collapse, let's say we collapse back in here, right, you focus on just getting in short outside the range, right? If we collapse, without any pattern at all, then your goal is you focus on selling high, buying low, right? Staying away from the middle of that trading range. Should be an interesting session here for tomorrow. We're going to find out what these bulls are made of here sooner than later. Now, from one narrow range to another narrow range, the S&P range bound and back in the middle of this narrow trading range this evening. And that tells me to stay patient because clearly this market needs a pulse right now, but wait for a breakout and look for the failure patterns, right, to buy low, sell high, and avoid the middle. So a lot of this will repeat from what we talked about already this week, right? We saw a beautiful example of this already today. Strong move down into the moving average, back up, 2 try rule. And we're trying to do the same thing. Stay away from the middle. Let's go up, 1 try, 2 try, failure, right? Let's go down, 1 try, 2 try, failure, right? Let's focus our energy right now on fading those breakouts. Now, this can be difficult because, as you can see, right, sometimes we get these really strong moves, right? So we go running lower, the moving average comes over, everybody's trying to sell that pullback, but again, the market is not a trending day. So the bears, they try to sell that pullback. Now we know where their stops are. And buying into those stops using a seller failure pattern will usually result in a nice strong push higher. Then I can use that moving average, right, for a bull pullback, right, a buyer pullback pattern, right? So I'm looking for the 2 try rule down below the low of that range, seller failure into bullish strength, right, bullish strength, and then into a bull pullback. You'll notice I'm not talking about buying it as it's going back into the range. I'm buying it on seller failure, then it will turn, and then buying the pullback. Now, if you're here for the first time today, I want to make sure I give you a lot more details on this strategy because we've been seeing a lot of trading ranges, and trading ranges are, at first, they're one of the hardest ways to trade because as new traders, most of us just learn how to trade, pullbacks. We learn how to follow the trend, right? But there is no trend right now. And so to give you guys a deeper dive into the range bound strategy, what I'll do is I'll put a free trading course in the upper right hand corner here. Grab that free trading course, upper right hand corner, pause the video, not to worry, I'll be here when you come back, right? And make sure you register right now for that free trading course because that's going to teach you the right way to trade a range bound market. You're going to learn my 2 favorite patterns for a range bound market, which are traps and failures. You'll learn about the pendulum swing. You'll learn about range expansions. It'll be, trust me, pause the video, grab that free trading course, much deeper dive, right, into this trading strategy. And then that way, you'll get the most out of this class, right, this newsletter every evening. So again, we're looking for a nice break up, wait for it to pull back, usually to the moving average, right? That moving average, of course, will pull back. The buyers will try to buy it, right? They'll try to buy it, and they might be successful, but if they're not, we know where their stops are. We can sell into those stops, But then again, right, don't chase after it as we go lower, right? That's the rookie trade. At that point, you're selling low. I want to sell high up near the highs of that range. So I wait for the pullback, right, and I sell it at that point, right? That is the 1-2 try rule, fading the breakout, trying to sell high and bring it back down into that range tomorrow morning. So we stay away from the middle, and this is always a tough part on a Friday morning, narrow trading range. You know, if we spend most of the session tomorrow inside that trading range, you got to sit on hands and just wait for it because that's the magnet. You don't want to be trading here because it's going to go up and come back down, go down and come back up, right? And also don't get spooked by a strong breakdown, right? A strong breakdown is just a strong breakdown. I want to see it come back, hit that moving average. Then where do we go from there? Do we keep going lower for a breakout, or do we fail and run back up into that range, right? What does a breakout look like, by the way? A breakout would look like this. It's a 2-try rule that doesn't fail. It's a 1 try, it's a 2 try, and it just runs. So if we see that second run, right? If we see that second run when it pulls back to the moving average, right? So we see a strong move down, pulls back to the moving average. Again, I'm looking to fade, right? The failure going back up into the range, 2-try rule failure, right? But again, if it runs, right? If it's blow your hair back strong, then we connect these lows, bring it up to that high, and we look for that sell. Usually that sell is going to be somewhere between that prior swing and the top of that channel. We look for that sell, right, going lower, and it will, at that point, it'll be a new trend, right, developing to the downside. So I am more than comfortable trading the breakout, but I need to see proof. And that proof, right, comes from a strong move that can follow through. We saw a good example here, right? Strong move down, pulls back, fails. We got to buy this sucker going back into that range now, right? Strong move up, buyers try, they fail, right? We're selling this sucker back down into that range. So buying low, selling high, avoiding that middle. And who knows? Maybe tomorrow we do get a little Friday morning breakout on the S&P. We're going to find out. Well, over to the Nasdaq here now. We talked about this last night on the newsletter, right? Today's retail sales crushed, right? Crushed those numbers today. Holy Christmas. Retail sales, 8-month highs right now. Very, very strong number. And as I mentioned last night on the newsletter, you've got to expect most retail sales numbers are going to have a big impact on the Nasdaq because of companies like Amazon, right? Because of retail sales, right, going through Amazon. So bottom line is Nasdaq obviously bullish, right? No trading range here anymore with a spike in channel pattern, possibly a wedge pattern as well. As you can see, I've drawn up that rising support trend line. That tells me to focus on buying opportunities below the prior swing lows, using traps, using seller failures for the final target up at that measured move up there, 73, right, 47. Now, real quick here, guys, whenever you see a strong move, and it's really important that you understand how to identify these patterns. Anytime I see a strong move in one direction, okay, it doesn't pull back to the moving average, right? Most of the time, right, markets will pull back, right? They have kind of that ebb and flow to it, right? Well, if you're seeing a market that just runs, doesn't pull back to the moving average, we call that a spike, right? We call that a spike. Now, a spike, right? A spike will usually turn into one of 4 scenarios. Either a spike in channel, a spike in wedge, or a spike in range, which we have on oil, or rare, a flag pattern, right? Flag patterns are relatively rare considering the situation. Okay, so whenever we see a spike, and a spike is what? A strong move that doesn't pull back to the moving average, you immediately know, right? You immediately know it's a spike and you're looking for one of these 4. Now, here's the next trick, okay? Listen closely here. This will solve a lot of problems. What you're waiting for is you're waiting for the pullback and to see if it makes a new high. You're looking at these highs right there. If these 2 highs are higher highs, then you know for a fact it's going to be either a spike in channel or a spike in wedge. Okay? If we don't get highs, in other words, if they're double tops, okay, then it's a spike in range. And if they're lower highs, then you know it's a spike into a flag pattern. It's called a flag pattern. It's an old school pattern. Okay, so once you see that spike, right? Once you see that spike, it pulls back. Does it make a new higher high? Perfect. Now you know it's got to be either a spike and channel, in which we're going to buy the low of that channel, or what might start off as a potential spike and channel, right, may end up not, very important, not rotating all the way down, and it actually becomes a wedge. Okay, now I'll go into more detail on all four of those, again, inside of that free trading course in the upper right-hand corner. You'll learn all about spike and channels, spike and wedges, right, and everything in between in that free trading course. So make sure you grab that, right, in the upper right-hand corner. But the bottom line, though, is, right, we see a strong move up, right? We pull back, and we go a new higher high. So right off the bat now, right, we know it's not a spike in range. It's not a flag pattern. It's got to be either a spike and channel, right, or a spike and wedge. Now, initially today, I lined up this high and brought it off that low, right, and that gave us the signal, obviously, right, to be buying at the low of that channel, right? Well, then, as you can see, though, once we got this new high here, right, it kind of lined up here now as a much better suited spike and channel. And that's the way the markets work, right? What's amazing is that the markets will literally give you great trades just based on what you know at that time. And every new candlestick gives you a little bit more information. And as you get more information, we start adjusting our strategy, right? So now, as we see this lining up so perfectly right now, unless this thing holds, unless we start seeing it go inside of a wedge, right, we're looking at this as a spike and channel. Now, the key to a good spike and channel is to look for breaks below prior swings. Spike and channels are very similar to triangle patterns. If you've watched our newsletter this week, right, you know that triangle patterns are all about the swings, right, the edges, the extremes of that triangle. We talked about that a couple times, last night being one of them, on this very market, right, on the Nasdaq. So the key here now is I want to get down below those swings. And ideally, the deeper, the better. And this is always a bit tricky about spike and channels because oftentimes these pullbacks can be pretty darn extreme, right? Let's move that over here a little bit, right? So what we're looking for is a deep pullback and a retest of that high. Now, if it becomes a wedge, nothing changes, right? If it becomes a wedge, nothing changes here, right? So keep your eyes peeled on those swings, right? And we'll keep looking for that move down, right, so we can buy it back up. Now, what you'd expect in this situation is that we're going to see some sort of deep pullback, right, some sort of deep pullback. Now, that deep pullback will bring the moving average over, and people will undoubtedly try to sell that pullback. The problem, though, is if you have any experience in trading spike and channels, you know that almost every spike and channel is going to look like it's a reversal, because it usually pulls back so far down towards, again, right, towards those prior swings. You just have to kind of get used to this. It's just kind of part of the way that particular pattern works. Most spike and channel patterns, it has a lot to do with the fact this spike doesn't really allow that many buyers to buy low, and so it tends to pull back pretty sharply, right, because it runs out of momentum right after a few moves higher. So the moral of the story is I'm expecting to see a deep pullback. Hopefully we get it, because that will give the sellers a reason to try to sell that pullback to the moving average. And that's exactly what we want them to do. We want those bears to try to sell, because now we're going to know where their stops are. And at that point now, we can look for buying opportunities back above that prior swing. That will usually run the stops for the short-term sellers. When sellers get stopped out, they become buyers. It's just by default. The only way to get out of a short position is to be a buyer. And at that point, you now have buyers buying low. You also have sellers buying as well. And the market will jump higher. As it jumps higher now, the moving average comes over. And now that prior level of resistance becomes support. And we can now use it for a pullback pattern going higher. Right? So once again, looking for what I call the 2-try rule. right? That 2-try rule, meaning we're looking for that 1 try lower, 2 tries lower. It kind of looks like the letter W. Down, up, right? Letter W for the buyers. Looking for a failure pattern into a pullback pattern. And again, the objective is going to be up, right, to that measured move, right? So that's our plan as the market pulls back tomorrow. Get that 2-try rule, seller failure, buyer strength. Now, what if we go sideways? You know, we're starting to look a little bit flatty here, a little flat line right now, right? That moving average starting to flatten out. We're starting to see maybe we got a bit of a range going on there. All right, so what would the range look like? Well, it'll probably be something like that, right? Down to this low right there. So let's say tomorrow morning, right, we're sitting here looking comfortable inside that range, kind of like the S&P. Well, now what is it? It's a spike in range. It's a strong move up into a trading range. Okay, how do we trade a spike in range? The same way we trade, right? So we talked about on the crude. We look for a breakdown. That breakdown should result in sellers trying to sell a pullback. If and when they fail, I then look for the buy. We go back to the high. Now we look for is what I call the fake out, breakout, pullback pattern. And that's going to be a strong move through the high, a 2-legged pullback. Key here is get the moving average up above the high of that range, and we're off the races up to that measured move. When it comes to a trading range, if I want to trade a breakout, I need strength. Okay, because remember, trading ranges are balanced markets. So I need strength. And one of the most common questions I get from new traders is, well, how much strength? And how do you know what strength is? What is strength? Everyone's got a different opinion of strength, right? My definition of strength might be different than your definition of strength, right? Makes sense, right? We all look at the markets a little bit differently. So my way of making it black and white, right, yes or no, is the moving average, right? Is the moving average above the top of that range? If it is, we have a strong enough breakout to use what I call the fake out, breakout, pullback pattern. So if the market goes sideways tomorrow, that's the plan, right? It's almost identical to what we talked about on oil, right? So same plan on oil, the same plan tomorrow for the Nasdaq. Okay. Last but not least, how do we reverse? 3 things, right? And I call this the 1, 2, 3 reversal, right? It's really a 1, 2, 3 strength move. It's a strong move down, a pullback to the moving average, and a strong move lower. It needs to pull back to that moving average, because what you'll see happen a lot is you'll see something like this, where it'll pull back. Oh, come on. It'll strong move down like this. People start thinking it's bearish now. Then they pull back to the moving average, but all that does is fail, right? And we go back into that range again. Does that make sense, right? This right here is not enough. Strength, pullback, strength. I really want to see it go back and touch that moving average, right? Because that's where I know definitively that we have, right, sellers entering the market there, right? That's their last shot and then back up in. So a true 1, 2, 3 reversal is going to be a strong move down, pull back to the moving average, right? And then strong move through. Find that new bear channel, right? Don't chase after it, right? We don't want to chase after it. We wait, we find that new bear channel, and we look to sell off the high of that new bear channel. The target at that point now becomes 72.05 all the way back down, right, at those lows. All right, guys? And don't forget, everything I'm talking about here, if you want that deeper dive, upper right-hand corner, right, and grab that free trading course. There's your plan there tomorrow on the Nasdaq. How about some gold right now? And again, I talked about this last night, right? Gold and the euro were expected to be very difficult today because of the ECB announcement. The euro got hammered, right? Gold obviously was moving well, but you'll notice ever since about 8:30, right, once Draghi hit the microphone, it got really, really choppy. So hopefully, right, you were able to avoid getting chopped up too much today on this gold market. Gold is bearish and headed back into the weekly trading range, and my plan is to focus on selling opportunities up around the high of this channel with a target down at those range lows tomorrow morning. Now, in case this is the first time you've been tuning in here this week, right, we've been really range bound here on gold. So we're above the top, right, of that trading range. Okay, I was looking for a pendulum swing, right, but again, Draghi was speaking this morning, and everything kind of gets thrown out the window when they decide to stop QE, right, and talk about why they're doing, that was the reality. The reality was we weren't going to be able to really do much with it until Draghi stopped speaking and the market had a chance to digest what was happening. The bottom line, though, is we saw a nice, strong move up, a deep pullback, and, the buyers, they should have been able to retest this high. We talk about this quite a bit on this newsletter. Anytime we see a strong move in one direction, we usually see a deep pullback, right, and what? And a retest of the high. Right? Well, if they can't retest that high and they collapse back down again, once we see that new lower low, well, now it's done, because now, pending any news that comes out or unexpected situation comes out, now there's a trend line coming down, right? And now buyers, they've got to get through that trend line now. It's a big punch in the gut for the bulls. It also gives the bears like me reason now to start looking for buyers to try to buy this thing up and let me sell into that trend line. This trend line becomes your best friend now for a seller, and because we're trying to go back into that range, why not? Let's drop it right back into that range. Okay, so right now, again, we got that strong move higher, deep pullback. Again, a lot of this was rather unpredictable today because of Draghi. They should be able to easily go back and retest the high. They don't. They collapse back over, right? And now I'm marking my level of resistance. That level of resistance is way too obvious for buyers to ignore. So at this point, if I'm a buyer, what I'm thinking is I'm trying to buy down here, right? The buyers try once, the buyers try twice. I would expect you're going to see some more buyers, at least one more round of buyers down below that 1304 level, just because it's the only place they're going to have enough open space. Right? Nobody wants to buy here now. Who wants to buy there? That trend line's right there. What'll happen is it'll go down. The buyers try again, but now we got them where we want them. Because now the buyers will try once, the buyers will try twice, and if this thing starts to teeter and run over, every single buyer who's still holding their breath, trying to go back to a target, back at that high, they're going to see this and go, shoot, we're on the wrong side of this, and they're going to get out. They're going to dump whatever contracts they have left, and this thing will tumble back down in, right? This is another example of the two-try rule. Strong move up, right? One try to retest the high. Two tries to retest the high. They fail. See ya. It will collapse right back against them as literally all the buyers lose all momentum, right? All confidence, and the price will sink back down. So that's ultimately my plan here for tomorrow. I've got my eyes on this trend line. I've got my eyes on these swings, right? And I'm ultimately looking for a trap into a failure, that failure, right, into strength, and that strength into a pullback going back down in. Now remember, a trap pattern has to come above a prior swing, right? So trap pattern, failure pattern, right, and pullback pattern. Trap pattern up above those highs, two try failure going back down into that range, and then again, waiting to sell high, selling high right off the pullback. Trap into failure, failure into strength, strength into pullback, right? It's just the way the markets work. As the market goes higher, the buyers will try to buy that pullback, and hopefully they'll fail so we can sell this sucker back down. Now, don't get discouraged if we end up collapsing lower, okay? And do not sell down here. Okay, do not sell down here because you've got that measured move hanging out down here too, right? So I don't want to sell down here. Again, I would expect there to be one more round of buyers, and then we can look for that sell right off the high of that channel, right up above the high of that range. And where's my target? My target is coming down 1,300, 1,299, right? And then we'll wait for that momentum to dry up. Let's say we do end up back to those lows. One try, two try. Failure, strength, pullback. It's the same pattern going back up into that trading range again. Now, how do we turn bullish? We're bearish right now. How do we turn bullish? Well, first of all, the minute we go back and retest that high, all bets are off at that point, right? If the buyers can go back and retest that high, I'm looking for one of two things. One would be a failure and a collapse back down. I'm looking to sell that collapse back down, right? Or we go blasting through it. And if we see it blast through that high, well, good for you, bulls. You get control. We look for that new channel, and we look for the buy from there, right? So again, if we do end up going up, do we see a failure strength pullback back down? I'm selling the pullback, right? I'll wait and see if the failure actually fails. Or, right, do we blast through, find that new channel, buy the pullback, and we're gone. And this could be a big, right, measured move for us tomorrow morning. Not probable, but definitely possible, right? Also, keep an eye out for a possible trading range tomorrow, right? What if we get stuck inside of a range? Nothing changes. One try, two try, failure, back down in, right? Bear bias. Okay, nothing changes. Sell high. If it goes sideways, directional bias is bearish. Sell above the top of that range using that two try rule. Relatively easy strategy there for the gold. Now, what are we going to do with this euro? Well, the euro's bearish with a strong spike in channel pattern. Yeah, obviously bearish. That tells me to look for selling opportunities up above that channel high with a target down at the prior month low, which also just happens to be the pendulum swing target from the previous trading range. I think the best way to look at this right now is to take a glance at the bigger picture here. And we can see for a moment there, right, we had our trading range there for a bit, right? We run up, and of course now the pendulum will swing back down. I'm marking up the move higher, I'm marking up the move lower, and well, I'll be, look at where it is, right down at that 15,200, that prior month low. So as I zoom back in now, we easily have momentum on our side. Don't ask me why stopping QE at the ECB announcement this morning resulted in a bearish trend. This is exactly why I tell new traders news is nothing but noise. It's the reaction on the chart that matters. This is why I tell people don't worry about what the news was. It doesn't matter what's coming out of his mouth even. All that matters is what are you seeing on the chart? Okay, and remember, in the time it takes you to do all the research for the news, listen to the news report, which by the way is always delayed by a few seconds, right? You're never going to be able to get the news right out of the announcement, right? It's always going to be a little bit delayed. By the time you get all that stuff done, you try to figure out what the reaction, just look at the darn chart, right? You know when the news is coming out. We knew Draghi would be speaking tomorrow morning. We knew to expect a move. Right? Did I really need to dig into the stats and the numbers to know what the heck was going on? No, right? So close out the news media, right? They're all lying to us anyways, right? They're all bought and paid for by advertisers anyways. In fact, be very careful trusting any website that has advertising on it. It's one of the biggest reasons why I've said no to advertising on my blog is because you become a slave to the advertiser, right? Okay, bottom line is we're bearish. We knew the news was coming out, easy to see it. But again, a very good example of whatever the news came out as, it doesn't matter because the reaction was completely the opposite, right? Which is a head scratcher, but that's the way the markets work. Okay, so just get used to it, understand it, acknowledge it, move on. So now we do have rollover tomorrow, okay? And rollover is, it's going to happen, right? It's likely going to happen. As I'm looking at this right now, I can see that we finally have more volume, right, on that 918 contract. So 918 contract, right, is going to be what we're going to be trading tomorrow, right, as I record this at the very tail end, right, of the session. Okay, now the 918 contract will be the exact same thing. It'll be a little bit different price, but the idea here is a strong move down, a pullback, another lower low, right? What is that? Spike and channel. Now, this is obviously a very dramatic version of a spike and channel. But what did we talk about before? We always look for what? That deep pullback. Let's do a different color here. That deep pullback, right? Why? Because the strength of this move lower, there just haven't, I can guarantee you a lot of people, A, didn't even try to trade this today because they knew Draghi was going to throw them some curveballs, and B, it never pulled back to the moving average. So whenever I see a market that doesn't pull back to the moving average, the first thing I think of is holy smokes, everyone's still waiting on this, right? And they're going to wait up at those highs. So I would expect, and I'm hoping for, a nice big correction. That correction obviously is going to look like a reversal to a lot of rookies. They're going to try to buy that pullback and reverse it. And if they do get the reversal, well, heck, let's just trade it long. Sounds good to me. I'm not going to predict the reversal, right? But if we do get the reversal, what does the reversal look like, right? 1, 2, 3 reversal. 1, 2, 3, strength, pullback, strength. If we do get the reversal, well, heck, no problem there. Right, I'll buy the pullback to that trend line. We'll look for the retest back over that high. But in most situations, though, right, in most situations, we're going to end up correcting. Moving average comes over. Buyers try to buy it, right? They get halfway towards the retest, right, and they fail. We know where their stops are, so we can easily sell that going with the momentum of the market. That brings the moving average over, and then we can look for that sell to finish off this move down to that prior month low. That's the goal. Now, I have to warn you, a lot of times when we see a strong move like this, right, nobody wants to take their profit. Think about it, right? If you're in this trade right now, would you take your profit right now? I'd probably wait. I'd probably leave a little bit of the position open to run down to that prior month low. So when we see these strong moves that finish literally at their low of day, a lot of people aren't going to take their profit. So what happens? The market doesn't pull back, okay? But at the same time, are you going to buy this? Do you really think someone's going to come in and buy this market? Please say no. Please say no. I know we want to be contrarian, right? But this is not the time. Pick your battles to be a contrarian. Not when this thing is buried going lower, right? Not the time to try to buy a market. Wait for the turn. So again, nobody's going to have the guts to buy this, at least no one with any experience, that is. So now we have the sellers who are still sellers, and we have buyers who are just waiting on the sidelines. What's going to happen? It's going to go sideways. Nobody dares buy, and nobody's taking profit. The moral of the story is that when a market runs this much in one session without any pullback, right, usually the next day will be a range. And if it's a range, even better, because now we know one try, two try. A trading range basically just telegraphs the trade for you. A trading range at this point basically has a big neon sign that says, ooh, just wait for it to go higher. Wait to go higher, wait for the pullback, and fade it back down again, right? Or, a little more details here, right? Look for a trap high above that battle zone, right? A trap high, moving average comes over, pullback fails, trap into failure. Now, we don't want to trade back down at that low, so what do? We look for that, move back up, right, and sell it there, right? So trap high, failure, don't sell low, right? Sell it high as we go back down. And this goes for even if we keep going lower, right? Even if we keep going lower here. If we keep going lower and we get down to that prior month low, now your job is to look left, find some of those prior swings, same thing, trap, failure, back down. All right? So if we go up, failure, strength, pullback, back down. We go sideways. That's the easy one. 1, 2, trap high, failure, back down. If we go lower and we end up down in that prior month low, wait for a nice juicy correction, trap, failure, do it again. Okay? Once we get to that prior month low, though, stop selling, right? Because we got to see more proof down here to make sure we can keep selling on strength. All right, guys? Last but not least, how do we reverse? 1, 2, 3 reversal. 1, 2, 3. Strength move higher, new channel, and we're off the races there, trying to go back up to retest that high. That could happen tomorrow, but it's going to take one hell of a failure for the Bears. Literally, tomorrow needs to be bring your bull to work day, right? And all the Bears have a holiday for some reason, right? That's the only way this is going to be able to return, because I would imagine whatever goes up tomorrow in the euro is going to be smacked back down, just because of the fact that we haven't pulled back to that moving average since 7 o'clock Eastern time. Guys, last but not least, don't forget, grab that free trading class. Grab the icon, the information icon in the upper right-hand corner. Grab that free course. You will not be disappointed. And don't forget, no newsletter on Friday evenings. We'll wrap up what has been an incredible week on newsletter, in the trade room, and the week from hell, which was coined earlier this week, right, with all that news, is almost behind us. Have yourself a productive and profitable quadruple witching tomorrow. Keep an eye on that time. And don't forget, if you want to learn more about becoming a client, I have beginner, intermediate, and very flexible payment options available on our advanced membership packages right throughout the summertime months. Don't forget, I've got a free trial that includes our free trading course as well as a free pass. Come out and join me in the trade room and learn more about our strategy. Guys and gals, wonderful job this week. I'm proud of you all, especially if you're still here with me this evening, right on this Thursday night. Keep in touch. Be well out there. Be nice to each other, will you? And be here next time. Adios, amigos.